Let's talk about sports wagering. Welcome back to the channel, investors. Today I want to talk about DraftKings. This is a stock that I've been following since last year when it went public through a reverse merger with Diamond Eagle Acquisition Corp. I have covered this stock on the channel before, back in May, but this stock has seen a rise of about 20% in recent weeks. If you follow my channel, you already know the format of my videos, so today we'll be looking at what exactly DraftKings do and their potential market. We will look at what the analysts think and see what Cathie Wood thinks. We'll look at the very latest exciting news. Let's do some technical analysis to form a strategy and determine a good entry point. And finally, we'll check out the latest financials and future projections, and I'll give you my conclusion on the stock. Before we get into the video, it takes a lot of time to research companies like this. So if you find any value in this video, can I ask you to smash that like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 150 likes, help me make that happen. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. It's a great way to show your support for the channel that's 100% free. I want to point out that I'm not a financial advisor, this is not financial advice. What do you think of DraftKings? Have you invested? And what price target do you have? Leave a comment down below, now let's get into it. DraftKings is a leading daily fantasy sports contest and sports betting operator. DraftKings was founded in Boston in 2012 by Jason Robbins, Matthew Kalish, and Paul Lieberman, who hold the roles of CEO, CRO, and COO respectively. Since the first daily fantasy sports platform launched in 2012, DraftKings has grown and grown fast. Now it offers an immersive sports entertainment experience across 15 distinct sports categories in 8 countries. In August 2018, they launched DraftKings Sportsbook, the first legal mobile and online sports betting platform to launch in New Jersey, the first state outside of Nevada to pass sports betting legalization. DraftKings Sportsbook now operates in a number of US states, allowing players to engage in betting on major US and international sports. In April 2020, DraftKings went public through a business combination with Diamond Eagle Acquisition SPAC, and DraftKings is the only US-based vertically integrated sports betting operator powering sports and gaming entertainment for 50 plus operators across more than 15 regulated US and global markets. DraftKings is the most recognized and preferred app across its 3 sectors: daily fantasy sports, online sports betting, and iGaming. They are the market leader in both OSB and iGaming, operating in more states than any other sports betting provider. They have established many key relationships across sports and entertainment with various major organizations, which is constantly expanding, and we'll talk more about that in a moment. DraftKings is still in its early growth stage, and they are implementing this 5-year plan, as we can see here, which shows the level of promotion needed to bring in new customers, and the expected gross profit margins across states due to scale and integration. As online sports betting becomes legalized in more and more states, the market for DraftKings will become much greater, and DraftKings are in the perfect position to capitalize on this. When looking at sports betting companies in Europe, the UK and Ireland, such as Paddy Power, Betfair or Bet365, we can see the potential for opportunities in the US market for DraftKings. Now let's look at what the analysts think of DraftKings. So when we look at tip ranks, we can see that there are 20 analysts offering 12-month price targets for DraftKings. The average price target is $69 with a high forecast of $105 and a low forecast of $42.50. The average price target represents a 44.81 increase from the last price of $47.91. Looking at market beat, we can see that the most recent price target was set by Morgan Stanley at the beginning of this month, where they lowered their price target to $58. Other price targets were set last month, ranging between $42 and $73, with the majority of analysts giving DraftKings a buy rating. Most of these price targets are well above the current price, and as we can see here, the current price is in the lower half of both the 52-week range and the 50-day range, with total market capitalization of $19 billion. We can also see here from the ownership breakdown that only 30% of the company is owned by the general public, with insiders holding 10% and institutions holding 54%. This is all very positive. When we look at the recent insider trading, we can see that there's been a lot of shares sold, but this is nothing to worry about. Look at these dates. A lot of this is venture capitalist companies who sold shares once DraftKings went public. This is standard practice, and the majority of these sales are at a price far below the current price. So I think this is a great time to get into this stock. And as we can see here, major institutions such as Vanguard, Blackrock and Ark Invest have large positions in DraftKings. And we can see that JP Morgan has increased their shareholding by over 36,000%. Now, one opinion that matters most over the past year or two has been the opinion of Cathie Wood at Ark Invest. And as we can see here, as at the 30th of April this year, DraftKings is the largest SPAC holding in the Ark Invest portfolios. I came across this on Reddit, and we'll talk more about Ark Invest in just a moment. But first, let's look at more of the recent news and how it's affected the share price in the past week or so. So on Tuesday, DraftKings stock tanked 12% after a short seller report claims the company is hiding illegal activity. A report from Hindenburg Research claims the company has systematically skirted the law. This is the same short seller that is a frequent critic of popular startups, having previously targeted Nikola, Lordstown Motors and Clover Health. Now you might notice that all these companies have something in common. Every one of them has gone public by way of a reverse merger with a SPAC, so clearly Hindenburg Research is targeting SPACs. In this report, they have accused that DraftKings has systematically skirted the law via 2 Bulgarian subsidiaries. Meanwhile, insiders made use of market froth to sell more than $1.4 billion in DraftKings shares. DraftKings has officially responded to this by stating that the report is written by someone who is short on DraftKings stock with the incentive to drive down the share price. They have conducted a thorough review of the Bulgarian subsidiaries' businesses and were comfortable with the findings. The report was released ahead of market open and sent the share price sliding down from $50 down to $44. As of now, the share price has pretty much recovered nearly 100% off that drop. However, as we mentioned a moment ago, DraftKings has some serious institutional investors, and one that we mentioned specifically was Cathie Wood at Ark Invest. Cathie Wood's Ark Invest said it bought shares of DraftKings on Tuesday as the betting firm's stock slumped from the Hindenburg Research disclosed a short position. Ark Invest bought about 870,000 shares of DraftKings, making its position worth about $42 million based on the stock's Tuesday close. Now, I subscribe to Ark and I get alerts on what they buy and sell. Ark have been adding to DraftKings' position over the past few months. Even last month, they added 450,000 and 360,000 shares on the 6th and 7th of May. So Cathie Wood clearly believes in this stock. In other news since my last video, DraftKings announced the company will collaborate with the AGA to promote the AGA's Have a Game Plan to promote safer play. This collaboration marks the first time in the industry that a Have a Game Plan campaign will be comprehensively rolled out across a national retail sportsbook footprint. The campaign will appear in all 10 DraftKings retail sportsbooks across the country. The AGA and its partners educate consumers on the basics of responsible sports betting while increasing awareness of problem gambling. This provides DraftKings with some very good publicity that promotes the company in a positive light, which is something that can be hard for gambling companies to achieve. Furthermore, on this good publicity, last month DraftKings provides International Center for Responsible Gaming with financial support for the first of its kind sports wagering research. ICRG is able to proceed with a competitive request for applications from researchers around the world who are interested in pursuing groundbreaking research on problem gambling. Again, this is very good publicity that DraftKings are a socially responsible company. And finally, DraftKings announced that it will become the first official daily fantasy sports iGaming and sports betting partner of 23XI Racing and its esteemed driver, Bubba Wallace, pending regulatory approval in applicable jurisdictions. The official sponsorship will have the team continuing to sport the DraftKings logo for each race of the 2021 season. And again, this is very important to have a good sponsorship and publicity in a very positive light. And as I mentioned in my last video, the company already has partnerships in place with the NFL, the UFC, and the PGA, amongst others. These are all huge partnerships to have. So looking here at this chart since the start of March, we can see that DraftKings had been moving in this downward channel all the way to its low point back in the middle of May before moving out and breaking through this line of resistance. And now it appears that this line of resistance has become the new line of support. We can see that over this time frame, there has been plenty of volatility, with the stock frequently moving between these lines of support and resistance. It's also worth noting that the current RSI is quite low at only 40. When we look at the chart over the past week, we can also see this huge drop on market open which was caused by that short seller report, which seen the share price drop from 50 down as low as 44, and then a huge increase in the volume, which has brought the share price back up again, although it is currently just shy of where it was before the short seller report. I do consider there to be a lot of value in this stock at its current price. So DraftKings reports the first quarter revenue of $312 million, an increase of 253% compared to the $89 million during the same period in 2020. This is an outstanding start to 2021, and the company's CFO added, "Our $312 million first quarter revenue, 114% increase in MUPs and 48% growth in ARP MUP reflect solid customer acquisition and retention, as well as successful launches of mobile sports betting and iGaming in new states. We are raising our revenue outlook for 2021 due to the performance of our core business in the first quarter and our expectation for continued heavy growth." In other words, they've bet even their own expectations, and so they've raised the bar for future expectations. Monthly unique players has increased 114% compared to the same period last year, and on average 1.5 million monthly unique players engaged with DraftKings each month during the first quarter. This increase reflects strong unique player retention and acquisition across daily fantasy sports, online sports betting, and iGaming. The average revenue was $61 in the first quarter, which again represents an increase against the same quarter last year. So they've raised their 2021 revenue guidance from $900 million to $1 billion to a range of $1.05 to $1.15 billion. The increase reflects solid performance in the first quarter. And on the non-financial highlights, in the first quarter of 2021, DraftKings launched mobile sports betting and iGaming in Michigan and mobile sports betting in Virginia. DraftKings is live with online sports betting in 12 states that collectively represent 25% of the US population, and DraftKings is live with iGaming in 4 states representing about 10% of the population. In 2021, 25 states have introduced legislation to legalize mobile sports betting. 5 states have introduced legalization to expand their existing sports wagering framework, and 1 state has introduced legalization of sports betting limited to retail locations. In addition, 4 states have introduced iGaming legislation and 3 states have introduced online poker legislation. Overall, this is fantastic for DraftKings. As more and more states legalize gambling, the market gets bigger and bigger. So looking here at the balance sheet, as at the 31st of March 2021, we can see assets of $4.5 billion compared to liabilities of $2.2 billion, giving us a ratio of 2 to 1, and this is very healthy. When we compare the current assets to current liabilities, that's $3.2 billion to $600 million, or a ratio just greater than 5 to 1. And it's also good to see that a large portion of this is cash or cash equivalents at $2.8 billion. It's always very important for these early stage growth companies that are still making significant losses to have plenty of cash on hand. With regards to the liabilities, the largest of these is convertible notes of $1.2 billion. So there's nothing to worry about here on the balance sheet. With regards to the income statement, we can see here that the revenue of $312 million, which is a huge increase on the same period from 2020. But we can see that the company has incurred huge sales and marketing, product and technology, and general administrative costs. Overall, this leaves the company with a $325 million operating loss. There is also a loss on the remeasurement of warrant liabilities, and overall there is a net loss of $346 million, which gives a huge negative EPS of 87 cents. So with losses like these, you can see why it's important for the company to have plenty of cash on hand. But it must be remembered that this is a growth stage company, and a lot of these costs have been incurred on technology development, sales and marketing. And as we can see, this is having an effect on the revenue, as shown by growth of over 200% in 12 months, and guidance suggests that this will increase significantly again next year. So guys, that brings us to the end of the video. Before I give you my final thoughts, if you've watched all the way through, then please hit that like button. It takes more time than you could imagine to research companies like this and make these videos. If you're new to the channel, remember to hit the subscribe button and bell notification. I'll be running a competition later this month for subscribers. Like and subscribe to take part. More details coming soon. And leave a comment down below to say that you've liked and subscribed. So what do I think? My view on DraftKings has not changed since my last video. The potential in this market is absolutely huge. I live in Ireland where all types of gambling, online sports betting, online casinos are all 100% legal. And there's a small group of market leading companies making insane revenues in this industry, such as Bet365 and Paddy Power. When gambling becomes fully legalized in all US states, then whoever is the market leader at that point in time will have the opportunity to capitalize on what will potentially be the world's biggest market. DraftKings are putting all the deals and partnerships in place now to be that company. At the time of my last video, the Q1 financials had just been released that day and the stock was tanking. And I felt at that time that it was a huge negative reaction to what I seen as quite positive results. And I feel fully vindicated now that the stock has rose up over 20% in the past few weeks. Although they are still posting losses, DraftKings has a significant amount of cash available, and so I'm not worried about the losses. I see this as a very good opportunity to buy into a stock that at one point was as high as $74 and did not look like it was going to drop at all. The current recovery in the market should bring about a recovery to a lot of stocks that were hard hit, DraftKings included. As always guys, this is just my opinion. If anyone is thinking about buying this stock, I encourage you to do your own research, and if you find anything of interest that I have not mentioned in my videos, leave a comment down below and I'll look into it. As I said before, I'm not a financial advisor and this is not financial advice. Thanks for watching the video. What are your thoughts on the future of DraftKings and what are your price targets? Leave a comment down below and I'll catch you in the next one.